I wanted to show you something real quick, shoot this video because I know it's something that concerns many of you out there when you see this in the news. Here I am on my Yahoo page and I see Wall Street down on growing default concerns. And so I tab down here and I see the Dow Jones that closed last at 15.1. Let me click on this and bring up the chart. Okay, here we have a chart and you can get all kinds of information here. And if I look at this chart, let me hit the 1 month chart here. See the finger is pointing at 1 month. And I hit that. And now I see what the market has done from September 13th to October 11th. And it's gone from a high of 15.6 on the 18th of September all the way down to a low of 14.7 on October 8th. And now it's gone back up to 15.237 on the 11th of October, which was Friday. It's close. Now, what I want you to realize, folks, and I want to try to make this video as short as possible, is this here means absolutely nothing. Don't worry about it. Many people are going, wow, look at this. The stock market is tanking again. I'm getting sick of this. I'm not even going to put my money in there anymore. And I'm referring to people who have 401ks at work with a match and saying, I'm not going to put my money because I'm just losing my money. This is not true. By the way, if you have a 401k at work that does not have a match, I wouldn't put any more money into it. Remember, 401k money and IRAs are 100% taxable in retirement. So the little bit of money that you're saving on taxes now by contributing to your 401k pre-tax is nothing compared to the huge amounts of tax you're going to pay on that income in retirement. And when you leave it to your heirs after you die, they're going to pay a bunch of tax on it as well. So the only benefit, in my humble opinion, of a 401k is the fact that you get a match from your employer, and that's free money. So if you choose to take advantage of that match, only contribute as much up to the match and don't put any more money. There are other places you can put your money into other than the 401k. But anyway, so this is a 1 month chart. And let me show you what I'm talking about, why this really doesn't mean anything. I'm going to go over here to a 3 month chart. Now we see a whole different scenario here. We go back from from the 15th of July all the way up to the 11th of October, and you can see what the market has done. Up and down, up and down. There's your roller coaster. So we hear that it peaked on August 2nd at 15.6, and then on August 27th, only 25 days later, it went down almost 1,000 points, folks, to 15.7. I mean, or 14.7, and back up again all the way up to 15.5 or 15.676 on September 18th, all the way back down to 14.7 October 8th. This is utterly ridiculous, folks. It's none of this is based on the fundamentals of the companies in this that are represented by this index, this Dow Jones stock market index. This is nothing but pure speculation, rumor, innuendo, playing the market. This is all it is. Most of this is conducted by supercomputers of these big trading companies on Wall Street. They can get in and out of the market in minutes. And what you're seeing here is what we call a sideways trading channel. It just goes like this, on and on, up and down in this trading range between 14.8 and 15.7. You see this line here? Don't follow the little ball, follow the hand. This line right across here. It's at 14.8. the stock market has made this a resistance level, and they're going to drop the market down to that point and bring it back up. Take their profits, buy and sell all the way down, and then buy and sell all the way up and make money. This is how they make money in these kinds of markets. But how does this affect you? Let's suppose you have a 401k and you're putting money into it every 2 weeks. Every week if you get paid every week, but most people every 2 weeks. Well, for instance, here at August 2nd, which is about the beginning of the month, uh, you get a paycheck, and out of that paycheck, money went into the 401k. So you bought it 15.6. 2 weeks later, around the 15th of August, what did you do? Well, you got paid again, and more money went into your 401k, and you bought it 15.1. Okay, lower. Now you're saying, well, see, Victor, I just lost money. No, you didn't. Let's keep going. Now you get down to the 28th, 29th of August, you bought it 14.8. Market keeps doing its thing. A couple weeks later over here at September 16th, around there, you bought it 15.4. So the last couple times you bought money down here low, guess what? You're in profit. You've made money on that last 2 weeks of purchases. You've made money. Now it keeps going. September 18th. So, you're back up to 15.6. You're basically breaking even on this money you bought here the 2nd of August. And now the stock market goes back down again. Get all the way to October 1st. You're buying at 15.1. And then in 2 weeks' time, it goes up to 15.2 or so. So you're a little bit in profit level on that. And it just keeps going like this, up and down. So as long as you're putting money into it every couple of weeks or every week, depending on when you get paid, this volatility is of no concern. It can actually be your friend. If the market constantly went up, you'd always be buying at the higher level. I mean, you'd buy here, you make some money by here. But when you're buying down here at the bottom, and then you're buying it here around the top, you make, this money here earns quite a bit of profit. So this volatility over a period of time actually makes you more money. Now, if you quit your work, then that 401k is sitting there, or you roll it over into an IRA, you're not contributing to it anymore, then this isn't your friend anymore. For instance, the first 10 years of this century, the stock market did this for 10 years, went way up, went way back down, went way up, and then crashed in 2008. And they kind of called it a lost decade because you went 10 years and you didn't make a dime. If your money was just sitting there. Or else if you were putting money every week or two, you still would end up with more money into your 401k unless it was very risky. Now, Robert Kiyosaki, which is probably the greatest trainer, financial education trainer in the world, doesn't even like 401ks. He'd rather you not even put your money in the stock market. He'd rather see you put your money in a business, in real estate, in oil and gas wells, real assets that actually pay you an income. But he does have a course, and it costs you a good fair amount of money, and it takes you a long time to learn it. And then, I think you pay him a subscription to keep up with the service, but you get educated and trade in such a way that it takes a lot of the risk out, and you're able to take advantage of some of this because of the proper way of trading. And he did that just because some people are going to get into the stock market no matter what. So now, what does this have to do with the family bank? Well, with your family bank, you don't have to worry about any of this. See, self-employed people have options. They can start their own little SEP IRA for self-employed people, but again, you'll save on taxes, but you're going to get hammered in retirement. And so with the family bank, your money is not in the stock market, so you don't have to deal with this. Don't have to worry about this. Your money in the stock market just goes up. I mean, your money in your family bank just continues to go up every year. Just follow this hand. It just goes up, up, up every single year. It goes up reliably, guaranteed, And in the future, you're going to retire tax free from your family bank. So if you're self employed, oh, and by the way, your family bank is an asset that pays you an income. So it is a great way, uh, great place to put your money. And of course, you have all the advantages of being able to borrow from it and pay it back and even create more wealth when you borrow from it, pay it back. So that's a great advantage of your family bank. So I just wanted to shoot this quick video and let you know that um, this here, don't worry about it. It's meaningless. It's nothing to do. It's all based on rumor. If you're putting money into it every 2 weeks for a 401k with a match, can you're okay. Don't worry about this. Just don't stop putting money in your 401k. Just keep putting into it. Just make sure your 401k money is in decent funds that are available to you in your 401k. If you no longer work for a company, your 401k is sitting there. There's other places, there are other things you can do with that money than to be at the mercy of this, which you have no control over, and half the time makes no rhyme or reason anyway. Just for entertainment, let's look at a 6 month. Look at that 6 month, folks. 15.2, 14.7, back to August. See that, folks? And if we look at 1 year, here's the 1 year. Went from 12.5, we had a run up in the market, you can see, and now here's what we've been. All because of rumors and speculation of what's going on with the politicians. That's all. So I hope this was informative. Again, if you're self-employed, your family bank is a safe and reliable way to save for the future and be able to fund your operations for your business. For all of you, your family bank is where you want to go in the future to borrow your money so you can stay out of debt to other people. And instead of the banks earning all the interest, you get to keep it and grow your wealth for the future. That's it for now. Talk to you later.